Good afternoon, everyone. Welcome to the FTD University webinar titled 3 Ways to Get More Cash Out of Your Business. Today, you will learn 3 things that you can adjust in your business to help you free up significant dollars and improve your cash flow. Our featured presenter today is Dan Jablons, owner of Retail Smart Guys, a retail consulting firm. Dan's extensive career encompasses more than 30 years of retail experience. He shares his business knowledge with owners of both small independent retail locations and major retail giants such as Walmart and Target. Dan's consulting firm specializes in open to buy, inventory planning, marketing, sales training, and more. Once Dan is finished with his presentation, we will open up the webinar for questions. If you have a question, simply type it in the question box on the upper right side of your screen. Feel free to submit your questions during the presentation, and this webinar will be recorded. So let's get started. Welcome, Dan.
Thank you. It's so great to be here, and hello, everybody. Welcome to probably, for most of you, yet another online seminar, right? I mean, certainly since this whole crazy pandemic has started, we do more online meetings than we ever have in our lives, I know. But I'm hoping to keep this one fairly lively and engaging for you and show you some things that I think will help your business right away. So these are all things that I think you can do and apply right away. So we'll talk about them in some great detail. And like Janet said, we'll have some time at the end for some questions. So certainly type those into the box and we'll get started. Okay. All right. So here we go. So first, a little bit about me. She mentioned already that, yeah, actually, I think I sent you an old bio, Janet, because I have, God help me, 40 years of retail experience. Oh, now I'm old. Anyway, there you go. So a little more than 40 years of retail experience. And like she mentioned, we specialize in merchandise planning and open to buy, cash flow planning and those sorts of things. And really anything that has to do with retail, we get involved in. But I also, you may look at that picture and think you may recognize me from some other things. I live in Los Angeles, and I think it's state law that 1 out of 3 people in California has to say they also are an actor. So that includes me. But I was Larry David's lawyer on Curb Your Enthusiasm. You can see a picture of me with Larry there. And earlier this year, I did a commercial for Facebook, actually Facebook's ever first television broadcast commercial. And there's a little picture of me there. But really, my time is predominantly spent in the world of inventory and retailing and merchandise planning. And that's what we're going to talk about today. Okay, so what I'm going to talk about today actually has its basis in an old book by a guy named Russell Conwell called Acres of Diamonds. Okay, and he invites you in that book to dig in your own backyard for diamonds. And that's going to be a lot of what I talk about today, because, you know, the interesting thing, especially in retail, is that sometimes I talk to retailers and I say, you know, so where's your growth going to come from? Where's it going to happen? And sometimes it's, oh, I'm going to get this brand new line in that I never had before, or I'm going to hire a killer salesperson, or I'm going to add another location, or any of those things where people talk about their growth. And well, those are all things that are external to the business, right? Someone from the outside, a new line from the outside, another location from the outside. Those are all outside things. I want to look at things that are already inside your business that you can probably maximize and improve on and grow without having to do some kind of crazy growth-oriented thing. And, you know, here we are in the midst of this pandemic, and it may seem like an odd time to talk about growth. However, I have many clients that are actually beating last year at this juncture. It's an interesting thing. And I think, you know, as I look at across our client list and I look at the people who are doing better and the people who are doing worse, I mean, aside from those that are in super difficult tourist areas where, you know, there just aren't people going there, places like Hawaii and New Orleans and spots like that. The ones that are actually making it now are doing a lot of things that I'm going to show you today, and have also kind of like decided to attack this thing full on with lots of energy, and are just not going to allow themselves to fall apart, honestly. And I realize that sounds very sort of like out there and weird, but it is a true thing. I mean, a lot of this has to do with the energy that you attack this with. So I'm going to show you these couple of things today, okay? And I want you to keep an open mind for them and figure out how you might do them. And if you feel like you can't do them yourself, or you need some help or some guidance, my contact information is going to be at the end of this. And I'm more than happy, as part of this webinar, for free to guide you through some of these things and make sure that you understand how that's all happening. Okay. All right. So let's look for the diamonds in your backyard and see what we can find here. Now, what I'm about to show you is not theory, okay? These are not sort of theoretical numbers. These are actual results from actual stores. And these are people that, yes, we've worked with and we've helped certainly, but I don't want to take any credit away from the retailers themselves who really rolled up their sleeves and did some of these things that I'm talking about and made a huge difference in their bottom line. I'm going to show that to you right now. Okay, so there's a couple things you got to be willing to do as we go through this. Okay, the first thing that you're willing to do is you got to be willing to look at some stats, some key metrics, right? Because you can't improve what you can't measure. So we got to look at some stats, and for some of you, that's going to mean also things like not just looking at bestseller reports or selling reports. There's other things we have to look at too in order to make these kind of improvements in the business. Okay, you also have to be willing to change. There's that old adage: if you do what you've always done, you'll get less. Okay, I mean the actual adage is if you do what you've always done, you'll get what you got or less. But I've changed it to less because you know what? In this world, that's the way I see it working. So I modified that a little bit. Okay, and you have to be willing to act, make a decision, and even fail. Okay, failure again is an event, not a termination. And there's a big common phrase that people use a lot now called fail fast. You may have heard that a bunch of times. It just basically means I'm going to try something. If it doesn't work, we're going to let it fail quickly, recoup ourselves and go on to the next thing. But to the degree that you analyze something and don't ever take any action with it, is to the degree that you paralyze your business and you slow things down. So got to have a couple of things that you're willing to do, okay? And if you're willing to do these couple of things, we can make some significant progress here, all right? Now, the first thing I want to look at is something called selling cost, okay? Selling cost. So let's calculate it first, okay? The selling cost is your payroll divided by your revenue. So let's just say I have an employee, and in the month of January, they were paid $1,700. Okay, now that's just their payroll. Okay, not anything else. And let's say that same employee generated $12,500 in sales. That means that their payroll cost was 13.6%. You take $1,700 that you paid them, you divide it by the you divide it by the 12,500, and that gives you 13.6%. In a perfect world, I would want you to measure that by employee. I'd want you to measure it, and certainly weekly and monthly and annually, okay? Now that also means you've got to be willing to measure your sales by employee. They've got to enter their name into the point of sale system. Some people don't like doing that. If you're not doing that, then at least take all your employee salaries, divide into your sales, and see what your actual selling cost is. Now, 13.6 selling cost is kind of high, and depending on where you are in the nation or in the world, that percentage can change a lot. Okay, a good national average is probably about 9%. Okay, but some of you, if you're coming in from more expensive areas like San Francisco or New York, it gets closer to 13 or 14%. Now, let's look at an example. Okay, so I have a store. Their total expenses were 42%. Okay, fixed expenses, rent, things that don't change, are 23%, and their variable expenses like commissions and marketing expenses, that kind of stuff, were 19%, and their selling payroll was 12%, right? Selling cost we're talking about here. And they said, okay, so what if I could lower the selling cost to 10%? So I'm just looking for a 2% decrease. Not looking to fire everybody and hire, all new people that would work for less. Not looking to, dramatically cut people. I'm just looking for a 2% improvement in my selling cost. And maybe that comes through tighter scheduling. Maybe it comes through, analyzing how we're paying people and what their commission plans look like. If you have a commission plan, that kind of thing. I'm just looking for 2%. Well, watch what happens, okay? So here's a store, and they're roughly doing $750,000 a year. Okay, now their fixed expenses were $172,493, and you can see in both columns, both the original and the improved situation, that doesn't change. Neither did the revenue, by the way. We're not looking to sell anything more. We're just looking to, again, dig for diamonds in our own backyard. Just look for those places. So our variable expenses, by reducing our selling costs, went from 142 to 127. So our profit before cost of goods went from 435 up to 450, or $15,000, just by reducing selling costs for these guys by 2%. Okay, it actually produces $15,000, which is a 3.4% improvement in profit. It's just a 2% reduction of the cost. Okay, that's a significant change on a business doing $750,000. And so one of the things that I would invite you to do is to go back, calculate your selling cost, okay? And after you've calculated your selling cost, and then look at your revenue, and then look at what would 2% do for you, okay? Now, one of my stores actually did even more of this, okay? Not only did they try to reduce their selling cost by 2%, but they also offered a bonus to their manager if they can increase revenues by 5%. Let's see what that does, okay? So here's that same chart again. Here's the current situation, just like we had before, and here's that increase like we had, right? So the volume didn't change, the fixed costs didn't change, the variable expenses went down like we looked at, and so that was the $15,000, right? But now, if I couple a 5% revenue increase in that, okay? Well, so now my revenue is 788 from 750. That's a 5% increase. My fixed expenses didn't change because they're fixed expenses. They don't move. My variable expenses went from 142. Now they go to 133. They're still down from the original 142. They're up from this guy because why? It's a variable expense and my revenue increased. But even with that, okay, my profit before cost of goods jumps to 481,000. It's actually $46,000 if I can couple a 5% increase in there. Okay, now we're talking about some significant money. When you think about that, a store that's doing $750,000 to suddenly produce $46,000 in spendable cash that they didn't have before this is a huge number over 12 months, right? That's a lot of things that you probably want to do with the store, or maybe want to do with your own life that you're not doing right now. Okay, so tons and tons of opportunity there. Okay, it's pretty breathtaking and pretty dramatic. So I definitely invite you to look at this within your own business, okay? So that's our first little tip right there, okay? Can you reduce your selling cost by 2%? And could you couple that with a revenue increase? Which may seem crazy in the midst of this pandemic, but I tell you, I do have people that are doing it, and it comes down to, looking really at your marketing, making it more personal, making it safe for people to come in, showing that you're doing all the right things that way, okay? But that's our first tip, reducing your selling costs, okay? All right, now, the second tip has to do with markdowns. Okay, now, markdowns are one of your top 3 expenses along with payroll and rent, right? You spend, they're in your top 3 right there, okay? And understanding how markdowns happen is certainly a critical component of your cash flow. And I find that the problem with most stores is that their markdowns are not based on any kind of policy or procedure or regulated cadence, if you will. They're just sort of like, I've been looking at this thing for too long, let me take 40 off and see if I can't get it out of here, right? But, certainly managing your cash flow and managing that is going to become critical, especially, now. I mean, here we are in September, and we're in an election year, and no matter where you stand politically, it's going to be a pretty crazy election. And as you may, for those of you that have been in this business for a while, know that one of the things that happens during the elections, right, is that people go a little nuts, and it slows down sometimes the volume, and it slows down their willingness to shop, and they worry about, if candidate A gets in, the earth is going to explode, and then there are others people will say, well, if candidate B gets in, the earth is going to explode, right? So it kind of tightens everybody up and gets them a little strange. So managing our markdowns more effectively and understanding them is an important piece. So here's a different store. Let's look at their markdown situation. So again, I tried to pick stores all in about the same volume. You'll see all of my examples are in this roughly the $750,000 range. And again, all these examples have to do with not improving their sales any, just changing some of these diamonds in their backyard. So we said, okay, in the original situation, they were doing, again, about 749,000, and their markdowns were 21% of sales. And we said, okay, well, what if I could knock that down to 19%? Again, just a 2% improvement, just a 2% improvement, okay? Well, what happens is the markdown dollars they spent went from 157 down to 142. They pick up a full point of gross margin, okay? And the cash that generates then goes from 341,000 up to 348. We pick up about $7,500 just by improving markdowns, again, by about 2%. Now, many of you could look at that and go, oh, great, thanks, Dan, great tip, just reduce my markdowns, as if I'm not trying to do that all the time, right? But here's the thing about markdowns. The thing about markdowns is markdowns happen for reasons, and to the degree that you actually measure and look at and figure out what's causing your markdowns is to the degree that you can mitigate those and reduce them, okay? Now, I like to break markdowns or causes of markdowns into two classes. There's ones that are caused by selling and ones that are caused by buying. Okay, so let me talk about the selling ones first. Sometimes there are markdowns that happen on your sales floor because the product is there and your salespeople don't know enough about it, don't know how to sell it, don't have enough product knowledge, or maybe even don't agree with what's there. Okay, less on the floral side, obviously more on the gift side, but they may be like, I don't know what this thing is, or they may not agree with the price it's put out at, or they may not like it, or they may not think it's appropriate, or maybe they got some bad reactions from the first 3 people they showed it to, so they don't want to show it to anybody anymore, right? So there's definitely some selling side markdowns that you have to be cautious of, all right? What's happening on the selling floor that could be causing the markdowns to happen the way they're happening, okay? On the buying side, sometimes it happens because of the assortment. We have too much of something or too little of something, too broad an assortment, too narrow an assortment. A lot of times in our point of sale system, we aren't able to figure out generally what's happening because we don't have a good classification system. I've seen that happen also. These are all different causes of things that happen on the buying side. Sometimes it's I landed the goods too early. Sometimes I landed them too late. Okay. Sometimes I don't have enough of a vendor assortment. Sometimes I don't have a good enough color assortment. Okay. So selling side is going to be that the people on the floor either don't agree with or have had bad reactions to products you brought in. On the buying side, it's going to be that I landed the goods improperly, right? Now, if you take nothing else away from today's presentation, if you take nothing else away from today's presentation, look at that last line in red and think about that. Every time you sell an extra item, you avoid a future markdown. Every time you sell an extra item, you avoid a future markdown. Well, that's kind of a huge thing right there, right? If you could do that, if you could get your staff to do that, where they sell just one extra item, they would avoid a future markdown. Man, that's a game changer all in itself. Okay, so think about that. Train your staff on how to do that, how they can get one more item in there, right? And if they could do that, boy, that alone would actually mitigate your markdowns, probably even more than 2%. Okay, all right. So that's our markdown one. So we've done 2 right now. Okay, we've done markdowns and we've done that selling cost one. The third one has to do with your purchases, how you're buying inventory, and it's probably the most impactful one that I have. So watch me carefully on this guy. Okay, so purchases are the thing you spend more money on, right? You spend more money on your inventory than you spend on anything else, more than rent, more than people, more than markdowns, more than anything else. It is your biggest expense. It's also your biggest asset. Right, so we like to refer to it as a high-risk asset in that it is the asset you have to have in order to make money, but it's also a risk in that if you buy the wrong things or you do any things I just talked about in the markdown section about landing it incorrectly, too much, too little, not a broad enough assortment, too narrow an assortment, etc. You know, any of those things can affect this. So the key to purchases. Really, there's 2 key components. One is how you land it, what the timing of that is, and also the amount you have to land to satisfy your growth profitably, okay? And again, small changes here can have a huge impact on your revenue and on your cash flow, okay? So another example, okay? Here's a store, again, doing in the 750 range, and purchases were about 55% of their sales. Okay, we said again, what if I could just improve it by 2%? I guess you're getting the theme there now, huh? We're always looking at that 2% thing. But if I could do that, that means the dollars I spend on purchases go from 413 to 398. Okay, which means my gross profit goes from 338 up to 353. Again, another $15,000 improvement just by reducing my purchases by 2%. Okay, but wait a second, time out, okay? You can't just go, okay, I'm gonna take every order I ever write, and before I send it to the vendor, I'm gonna cut it by 2%, okay? Sweeping changes like that, knee-jerk reactions like that can be extraordinarily damaging to a business because you're gonna have certain classifications that are growing and they have increased demand and they need to be fed. There are gonna be certain classifications that are sort of in maintenance mode. They're sort of doing their own thing, okay? And you got to make sure you're at that maintenance mode and maybe try and turn a little bit faster. And then there are certain classifications that are just dropping, that are not working right now. And if that's the case, you got to basically figure out, do I fix that class or do I get out of it and put the dollars into the guys that are growing and do something different? Okay, and you know, sometimes a class is dropping, could be dropping for a number of reasons. Maybe, you know, it's time to look at a new vendor. Maybe we've hit the same note too many times. You know, those are the kinds of things you have to look at when you start looking at those classifications. You got to dig in a little bit more and get into more of the details to see where that's happening. okay? Now, the way you do this is you start having a really good, rock solid sales forecast, okay? Now, you don't want to plus or minus a percentage, especially now, right? When you consider for a moment where we're at right now between the virus, the economic effects of the virus, the fact that it's an election year, right? Time, by the way, when we've got to turn faster than we've ever turned before, right? Your turns have to be at least a full turn faster than probably what you're used to, because that's going to keep you lean and mean on your inventory and in better cash flow positions, okay? I'll talk more about that in a moment. But as you look at your forecast, you certainly have to consider where are things trending, right? The mistake that most people make is they let their accountant give them a forecast. It's an annual forecast, and that's kind of the end, the beginning, middle, and end of that, okay? Not the best way to do it. You really want to do it by month and by location if you've got it, and by classification. And the other thing you want to do that most people don't do is monitor the results. Did I actually achieve the forecast I set out to do in that month, and why did I miss it? Okay, so that's the key. Okay, how do we make that happen, right? So I got to forecast it. I've got to do it by month, by location, by class. What are they going to sell? Because that's going to tie to my next slide in a moment here. And I've got to monitor to see if I'm actually hitting that or not. Okay, so I want to forecast my sales very carefully, and then I need to forecast my inventory. Now, the key to inventory planning, okay, is something called the stock to sales ratio. And basically what it means is if I have a 3 stock to sales ratio, it means for every piece I sold, I have 3 on the floor, okay? Your stock to sales ratio will change over time. Obviously, you're going to have a higher stock to sales ratio in February for Valentine's Day and for Easter and for Mother's Day and that kind of stuff than you will maybe in June or July. Okay, so your stock to sales ratio needs to move up and down month by month, that kind of thing. Okay, and you're certainly looking at your inventory plan so you can plan your stock to sales ratio, plan how you're going to turn your goods, okay, so that you get the most maximum turn. Okay, if you're not measuring your turn, you need to start to do that. And certainly certainly as you look at turns of inventory, right? You've got to be able to figure out your average sales and your average inventory to get to what your turns are. If you're having trouble doing that, please reach out to me. I'll help you do that one. But your inventory, of course, as you plan it, you've got to plan things like, what does your vendor assortment look like? What does your color assortment look like? How much of it's basic? And, I wrote fashion there, but for you guys, how much is basic versus novelty? That's probably the way I would look at it, okay? The key here, by the way, is flowing in new inventory every single month. There has to be something new and interesting and exciting happening every single month, okay? It has to happen that way because that's what brings people coming back in. Now, in this world of pandemics and all that stuff that's going on right now, where people are not on the street as much as they once were, although they're starting to come back now, obviously, right? But if depending on where you are, that's going to be varying, right? So the thing that's going to bring them back in is that there's new, and exciting, and interesting, and fun product for them to look at, okay? A critical, important piece of what's happening now. Really, for the balance of this year, what we're advising all of our stores is 2 things, okay? One is that they've got to turn faster, and the other is turning faster means new, interesting, different product every single month, so people have a reason to come back to your store and shop you. Okay, so am I planning my inventory? Am I using the stock to sales ratio to make that work? Okay, so that I've got the right levels of inventory at each month. And I'm thinking about, by the way, when I do this, I'm thinking about what is my ending inventory going to be, right? Right now, as you think about your buying and you think about your inventory, you should be projecting out what your December 31 inventory is going to be. For those of you that are on a calendar fiscal year, really important for your taxes, right? The mistake that people make is that if they hang on to old inventory for too long, then when you pay tax on that old inventory. Did you know that? So you want to make sure that your inventory is as lean and mean as it can be. All right. Now, if I add up all this stuff, right? If I take the 2% that I was getting from the selling cost improvement, I got 15,000 there. If I can improve my markdowns by 2%, I got 7,500 there, and then I get another $15,000 by improving my my purchases, right? So stores doing the exact same volume could produce as much as $37,600. Now that's diamonds in your own backyard. It means you've got to start looking internally. Now maybe, by the way, as you dig into this, you may find, you know what, my selling cost isn't going to get any better. That's what it is. Okay, but maybe you can do better on your markdowns than 2%. Or certainly you can probably do better on your purchases. I will just tell you, after doing this for the length of time I'm doing it right now, every time I take on a new client, there's two things I attack right from the very beginning, right? One thing I attack from the very beginning is old inventory that's laying around. Why is that there, and what are we going to do to liquidate that? And the second thing is controlling the purchases better so that we actually get more cash flow and get more potential revenue in the door that enables us to do other things with. Okay, are there a million other things we could do? Sure. Could we work on marketing plans? Sure. Could we train your employees better? Absolutely. Could all those things happen? For sure. But the way you fund those things, the way you pay for those things, the way you make those things happen is by doing these simple little things that make a big difference in the bottom line. Okay? So I hope that makes sense, and certainly I want you to send me some questions as we go on here. But those are the three tweaks right there, and boy, they added up fast, right? On a store that's doing $750,000. I invite you to look at these same numbers within your own business. I do have a couple more things to talk to you about. Okay? While we're talking about your point of sale system, you know, I came from the point of sale world before I did merchandise planning and consulting. And what I can tell you is that most people do not effectively use their point of sale systems like they should be, okay? Lots of people run selling reports. You probably run the report that closes the cash drawer at the end of the day, that kind of thing. Sure, you know, that kind of thing you can look at, okay? But do you look at what you received? I have some stores that do a great job of running reports every week of what did they receive that week, and then when people come in, they have to look at that report and find it on the floor, so that when customers do come in, they can point out the newest, the latest, the greatest, the most fun things. And it also gives them a reason to post things, you know, on Instagram and Facebook, you know, doing videos and stuff like that, showing things that have just arrived. You know, little sidebar here, I certainly look at some stats like people's email stats, right? And one of the things that we look at is you know, the open rate of the email, right? You know that one where you look at what percentage of people that you sent the email to actually open the email, right? And the lowest open rate there is sale. But the highest open rates are things having to do with new, interesting, fresh product. Isn't that interesting? Your customer actually cares more about new product than they care about sale price, which is, I know, a bit counterintuitive, but that's the truth. That's what they do. So look at more than just selling reports. Look at your inventory report. Sometimes people say to me, well, I never run an inventory report. And I say, why? They say, well, it probably wouldn't be right. Okay, well, you know what? If it's not right, let's go count it and figure out what we're doing wrong to get the inventory wrong in the system. But man, if inventory is your bigger expense, if it's the biggest expense you have in the store, if it's a thing that you put more dollars in than anything else, shouldn't that be someplace that you curate and manicure your assortment and get it right? Okay, so that was just point number one there. I beat up that one for a while, but you know, it's one that's near and dear to my heart, so I talk about that a lot. The next one says look at sales versus receipts, and then look at your cash margin. What do I mean by that? Okay, let me give you a math example here for a moment. Okay, let's say you have a particular vendor, and with that vendor, you write purchase orders for $2,000 of merchandise. Okay, and let's say that $2,000 that you wrote that purchase order for, $2,000 at cost, you plan to put those goods out at $5,000. So I'm buying them for $2,000. I'm gonna sell them for $5,000. That's a 2.5 times markup. I'm not looking to do anything particularly dramatic or crazy there, right? So I'm gonna buy it for $2,000. I'm gonna sell it for $5,000. So the margin that I plan to generate is $3,000, right? Buy for $2, sell for $5, $3,000. Now that's what I expect to put in my bank account. I'm going to write checks for $2,000. My customer's going to give me cash and credit cards and store credit, whatever, for $5,000. So my bank account should increase by $3,000, right? All right, now what happens? Well, now my sales aren't $5,000. They're only maybe $3,750. Well, why? Well, because I took some markdowns, or maybe I didn't sell it all. Maybe there were some giveaways. Maybe I took one home for me. I don't know. Could be a million reasons, right? But my sales are $3,750, not $5,000. So if I wrote checks for $2,000, but I only got $3,750 in, my cash margin is only $1,750, not the $3,000 I had hoped for. So I'm short about $1,250. I hope you're following the math on that, right? So one of the things you want to talk to your vendors about is my cash margin what I expected it to be? And that's the best way to evaluate your vendors. And so I recommend often that people do something called a vendor scorecard. If you'd like a vendor scorecard, reach out to me and I will send you a sample one so you can see how that works. Okay, so that is how you evaluate who your good vendors are and who your vendors aren't. And really, if we're going to improve our turns for the rest of this year, and if we're going to improve our cash flow for the rest of this year, one of the things we have to really look at is who are good vendors, who are not such good vendors, right? And really make sure we're only playing with our A vendors right now, okay? Now look at point number 4, figuring out where you have old inventory that can become cash. You know, some people have inventory that's older than 3 months, some that's older than 6 months, some that's older than a year. And honestly, okay, if you have any inventory that's older than 3 months, okay, it's no longer inventory. You know, we like to say that your customer votes with their wallet. So if I put something on the floor and the customer, yeah, no thanks, okay, that means that stuff's laying there. And old inventory has a bad impact in a number of ways. Well, certainly number 1, you've got your cash tied up in it. Number 2, you're paying tax on old inventory. And you don't want to do that. Number 3, it affects the marketing of the store. You know, I've come to learn this example really well. If a customer comes in this month and sees what they saw last month, they're not coming next month. They don't feel like they need to. They've seen it all, right? Having new and fresh and interesting, exciting, fun inventory is the key to good selling, right? But the other one that's out there is that it's for you as the buyer, the owner of the business, or even if you're just a person on the sales floor, it's just hard to look at the same stuff and feel good about it. It's hard to sell old inventory because you yourself may have lost some of your enthusiasm for it, right? So got to watch out for that one, okay? Got to make sure that, you know, we're getting out of that old inventory and that it's not affecting your sales, it's not affecting your attitude, and certainly that you're getting your cash out of it, okay? And lastly, I'll say this: expense control. Now, certainly when the virus first hit, we all had to take a good hard look at our expenses and dive into that and make sure that we weren't being wasteful in our expenses. And if you're like most of the stores that I work with, you try to convert as many fixed expenses to variable expenses so that, you know, depending on whatever happens with the volume, you were in good shape, okay? And you want to control your expenses. I'm not telling you not to, but expense control, while important, is not the long-term strategy for growth. You know, you may notice if you read any kind of business publication out there and there's a particular company that's doing amazing with something, right? They got tremendous growth and they're doing really, really well and stuff like that. They never talk to the accountant about how you control the expenses, right? It's always about product. It's always about the design of the product, how they're selling it, how they're marketing it, that kind of stuff, right? It's never about expenses. Right? So you've got to think about that in terms of the product for your store, because really the best marketing your store has is having the right product at the right time to do the right things. Okay? So sure, I want you to look at your expenses, crack open that profit and loss statement, look at what those expenses are and see if there's anything you can improve there, right? And we talked a lot about improving a bunch of things by 2% here, right? But your growth is going to come from landing the proper inventory, thinking about which classifications you can grow and buying into those classifications and spinning your inventory, turning it faster and faster and faster, and constantly bringing in new product. So from my heart of hearts, okay, that's an important thing for you to look at, okay? All right. So I like to throw these other 2 quotes in here. It's kind of these are interesting ones. They're fun ones, okay? The first one is actually from Ben Franklin, and it's actually the forward to the Farmer's Almanac, which dates back to the 1700s, right? And in the forward to the Farmer's Almanac, there's this great story about retail, believe it or not, in the Farmer's Almanac. So all these retailers are in the village square. Okay, and envision this now: a bunch of retailers in powdered wigs, I guess, are standing there out in the village square, and they're upset because taxes are about to go up again. And they're freaking out about the taxes. And they're just like, oh my God, how are we going to survive? The taxes go up, the taxes go up. What are we going to do? How are we going to survive? And they turn to Father Abraham, the village elder, the guy who's been in retail longer than anybody else, right? And they say, Father Abraham, you've been in retail longer than anybody else. What can we do? What can we do to get around this tax situation? And Father Abraham says to them, we are taxed twice as much by our idleness, 3 times as much by our pride, and 4 times as much by our folly, right? What does that mean? So as expensive as taxes can be, and sure, they're expenses and expensive, right? It's far worse to be idle and do nothing. Okay, it's even more worse, okay, to be consumed by your own pride and not really look at the numbers and look at where things are going. And it's even more expensive, okay, to just ignore those numbers and ignore what you actually see happening there and believe some other thing, right? You've got to allow the numbers to be guidance for you. Now look, every retail business is a combination of art and science. The art is how beautiful these things are. The science is, do they make sense? Do they pencil out? Are they financially sane? Okay, so this thing, which is hundreds of years old now, actually still applies, right? And then there's that quote from Peter Drucker that all good ideas degenerate into work. I've given you 3 different tips here, but those are great. They're going to degenerate into you going back and studying those numbers. Now, let me say this before I leave this slide. Here we are in an election year, and you will hear every politician say the same thing, right? The politician is going to say that small business is the backbone of the society. And it's true. We hire more people than anybody else. We pay more in taxes than anybody else. We do more in our local communities than anybody else, right? When your neighbor's kid is raising money for their band or for their soccer team or for any of that kind of stuff, your store is the one that contributes. Your other store is the one that helps, right? And you guys, as independent retailers, are the pillars of your community. You are leaders, whether you realize that or not. And the rest of the world, as the rest of the world tries to recover from this horrible, horrible virus and tries to figure out how we're going to get to the other side of this whole thing, they look to the independent retailer. And right now, with the way things are in this country, when people are thinking about ways to entertain themselves and things they can do when they can go out, well, they can't go to big stadiums and watch sporting events. That's over. They can't go to concert halls. They can't go to theaters. The only place they can go is shop at independent retail. That's you. And so to the degree that you make your business a safe, sane, and fun place to be, is to the degree that you will not only survive, but you will thrive. And as a small business, and as a backbone of the economy, and frankly, a backbone of your part of the backbone of your individual neighborhood, you've got to survive. You have an obligation to do it, as horrible as that may sound, and you can do it if you follow these couple of tips. Okay, but don't feel like you're doing it alone. Certainly the folks at FTD are here to help you, and certainly we at Retail Smart Guys are here to help you. So if you're stuck, if you're not sure what to do, please reach out. That's what we're here to help you with. Okay, all right, it's that moment, Janet, for questions. So let's do it. Okay, but by the way, my email is here on this screen, so do take note of that. If you need help with any of this stuff, please, please, please reach out to me. And even though it's not listed here, I will just say my cell phone number right now. It's 818-720-2585. 818-720-2585. You got questions, you're not sure what to do, and you want me to talk to you specifically about your business, please reach out to me. I'm certainly here to do that. But that said, Janet, let's open up the floor and see if we got any questions for any of these folks.
All right, thanks, Dan, for sharing a lot of great information. And actually, I think you have one more slide that does have your phone number on it.
Oh, does it? Okay.
Yeah, move forward.
So I jump there? There it is. Okay, good.
Yep.
Okay, we'll get to it in a minute, but good.
As Dan mentioned, we're open for questions. So as a reminder, if you have a question, simply type it in that question box that's on the upper right side of your screen. We have a couple of questions right now. Susan wants to know, does selling cost include benefits?
No, it's just whatever you're paying them hourly. Okay, benefits are a whole different thing, and they can jump up and down, but that can muddy the waters. So again, just to keep it apples to apples, you just want to have your selling cost should just be purely what you're paying them on an hourly basis.
Okay.
I probably should have put that in that slide. So thank you, Susan.
Ed says he has his purchasing set up by minimum and maximum levels. Is that what you recommend, or is there something else?
Okay, a lot of businesses, and I think a lot of folks on the phone here might have set up reorder points or min-max levels to sort of like, if I never want to have less than 6 of something, and if it gets down to 4, tell me and I'll go out and I'll buy 2 or something like that. That's what that means. Okay. And I recognize that in certain areas that probably does make sense, but you know, the issue that I have always on the reorder point thing and the min max thing is that often people set them based on a random number. You know, okay, I set my minimum to be 6, or I set my reorder point to be 6, and a lot of times I say, well, what made you pick 6? So, I don't know, sort of picked it. Okay, well, that's fine that you sort of picked it, but what does that really mean? In terms of, like, you know, do you ever evaluate that and go, okay, well, was 6 the right number? Am I reordering every single week, or do I never reorder again, right? Or am I running out of stock before that happens, right? Really, your reorder points have to be based on a bunch of things. It certainly has to be based on rate of sale, so you don't want to pick that number without going back and studying how many of that thing you sell in a week. But it also has to be based on a couple other things. It has to be based on vendor lead time, right? How long is it from the moment did you send a vendor an order? How long does it take them to ship you, and how long does it take you to receive those goods, because that's got to be factored into the minimum, right? So that you have enough goods to make it even while the vendor is preparing and shipping goods to you. You also have to consider how often you're going to go back and run the reorder point thing, right? If you do it once a week, it's one number. If you do it every 3 days, it's another number. And lastly, you have to consider what a good minimum presentation is. What is it going to look like? You know, I can run a very tight reorder point thing, but then it may look like I'm not in business. I learned that from someone actually who was in the domestics world, and he was a towels guy and selling towels. And we first set the min maxes and the reorder points based on his rate of sale, but then his towel wall was horribly empty. So you had to have at least a good base inventory of inventory that was there, so that you at least looked like you were in the business. Okay, so I think there's some value to it, but I think it has to be studied and evaluated. And again, you know, the problem with min maxes and reorder points is that it does not give you the ability to peak your inventory at the height of the season and valley it at the end. Most people don't change their min maxes enough throughout the year, and it needs to. So it's a mixed bag. I think it bears definitely some more conversation for sure. Okay.
Fantastic. Thank you. And just as a reminder, everybody, if you have a question, type it in that question box that is on the upper right side of your screen. We have a question from Philip. How quickly should I mark something down? Is there a recommended schedule?
Sure. I talk a lot about this one. I mean, obviously on the floral side of the business, you know, you may have to make a move sooner if something is just sort of not going to last, if it's starting to get bad, that kind of thing. I believe that you know, your first markdown probably needs to happen after product, you know, well, let me say it a different way. Anything that you buy, I would want you to be at least halfway sold through it in 30 days. Okay, and the reason is if I'm at least halfway sold through on 30 days, I can at least pay the vendor invoice, assuming you're on a net 30 invoice thing, right? So, you know, most stores plan their first markdown for something about 4 weeks in, okay? And usual first markdown is about 25%. They go to 35 after 6, and they go to as much as 50 after 8, okay? Again, the idea being, if I landed it and I'm not getting a good reaction to it, I want to get my money out of that. I want to fail fast, get my money out of that and into something that is going to sell. Okay. Obviously, there's going to be some there are exceptions to that rule. You know, if you had, like, you know, if you have some gift stuff that for Valentine's Day and it didn't sell, but you know, you could pack and hold it for next year, you could do that. I actually am really still a fan of like marking it down and making it go away rather than holding it in your inventory for a whole year. But you know, I recommend, you know, you start that cadence around 4 weeks and look at 4 weeks, then 6 weeks, then 8 weeks. I probably would start there just so that you get, you know, your money out of that stuff and into something else. Okay.
All right, fantastic. Thanks. It looks like we're out of questions. Do you want to talk about this last slide before we close things, Dan?
Sure. Let me do that. So, all right. I hope that this was informative and helpful to you guys. I really do believe in everything I said here, and you know, I hope you also get this sense of it too. This isn't work for me. I actually really love this. So I really do hope you reach out to me, because I would love to talk to you about your store and how things are going and what we might be able to do to help you and that sort of thing. And it, one of the things that we like to offer for anybody who attends webinars that we do is a free inventory and cash flow analysis. Okay, so this is absolutely free, and you get this as part of just being here today and spending time with us. So appreciate that a lot. If you're interested in that, I will connect to your point of sale system, or if not, we'll do it through some other reporting that you might be able to get, and analyze your business. We'll look at which classifications you're making money in, which ones you're not. Where could you grow? Where could you improve your cash flow? Where of these 3 points, or maybe even some others, might actually produce some additional cash flow for you? Okay, might look at your expense structure if you'd like us to, and kind of, does that make sense? Are we doing the right things or not the right things? That kind of thing. And look, it's not even that I'm a genius at this, okay? It's just that here's the difference. You know, I'm doing this webinar with you guys right now, but prior to talking to you, I was actually on the phone with 4 different retail stores before this. So I'm in different stores every single day of my life, and I get to see things that maybe you don't see. And because of that, I can get to see the greatest hits of what other retailers are doing out there. And I'm happy to share those greatest hits with you if you'd like me to. So if you'd like, we can do a free, no obligation, no crazy things about it. We'll do an inventory analysis of your store. If I think we can help you, we're going to show you where and how. If I don't think we can help you, I'm still going to give you the results of the analysis, tell you some things I think might improve it. You know, but we want to make sure that you guys are all making it through. And what I said about small business and independent retail, I really, really genuinely mean from my heart. You guys are the lifeblood of the society. You're everything. And so, you know, to the degree that we can help you guys and make sure things are going the right way, is to the degree that everybody wins. And so I really, really, really encourage you to reach out to me. My email is there. My cell phone is there. Okay, it's not an office phone. It's going to be, you know, scores of people who are going to, you have to, you know, wade through to get to me. That's how you get to me directly. Okay, so please reach out. And please try to apply some of these tips. I hope they help, but certainly take me up on this free offer, and I think it will help you. Okay. So that's that one, Janet. Any other questions that have popped in here?
Yes. So Linda said, do you have any suggestions for businesses who had to move to home-based due to COVID?
Yeah, I do. Sometimes when people move to a home-based business, or you know, lots of stores obviously move to curbside delivery or delivery-based businesses, or those kinds of things. Okay. Sometimes the mistake in the marketing is to try and be bigger than what you are, right? Make it seem like you're a bigger business, or that kind of stuff. The most successful thing that's happening right now in marketing is to show yourself individually out there. And by the way, you know, here's another thing I'll tell you that maybe you know, maybe you don't know this, right? Obviously, the #1 search engine on the planet is Google. I think everybody knows that. The #2 search engine on planet Earth right now is YouTube. YouTube. So I'm a big fan of doing lots of videos, and the videos do not need to be some Steven Spielberg super glossy music in, fade in, special effects kind of thing. In fact, the more raw it is, the more you just bust out your smartphone and take a shaky homemade video of you and product that you love, the more you're going to get better reaction. Okay, so do lots of videos, create a channel on YouTube for your store or your business, and put your videos there. Do lots of Instagram live events, do lots of Facebook live events. There's also a utility that we recommend to a lot of people called Comment Sold, commentsold.com. Take a look at that one. It's a way for you to sell product through social media without it being a crazy big e-commerce adventure. Okay, that's another way to sell stuff. So I hope that helps on some of those. But you know what? If you're a home-based business, now you move to your home, a lot of people move to their homes. A lot of people working from home now, right? So you know, people understand that. But they still want to transact, they still want to do business, they still want amazing, great product. And you know what? People are still going to need to buy gifts for people. There's still going to be teacher appreciation gifts, even if we're not going to school, even if it's going to happen from home through Zoom meetings and that kind of stuff, or homeschooling, whatever, that kind of thing. But more likely they're doing Zoom meetings for schools. And so they're going to need those gifts, you know? And so let's make sure we're talking about that. So I think it's just about a question to continue to promote as a home, and just say it, I'm a home-based business now, okay? And so you can buy the stuff from me through curbside, through delivery, through e-commerce, that kind of stuff. Say it, people will respect it.
All right,
Okay.
thanks, Dan. We have kind of a question comment from Kime, just trying to figure out, because a flower shop, a lot of their inventory is perishable, so it's, sellable for 3 to 5 days. And so they're trying to figure out, as far as like markdowns and your markdown strategy, how to really apply that to
May have to
perishable
be
products.
faster than that one, but you know what? The other thing that mitigates that whole markdown thing is turning faster, right? I can't mark down what I don't have, so you got to turn faster. And so I would, again, I would want to plan the sales. What do you think you're going to sell, and plan your inventory appropriately that way to make that happen. I think you got to be really, really cautious about that. And I would err on the side of lower inventory than higher inventory right now. Okay, until you start to see some more people hitting the streets, or until you see things are improving. That's definitely the way I would go with that.
All right, great.
Okay.
Thank you so much.
Mm-hmm.
All right. Well, it does look like we are out of questions for today. We just want to thank everybody for attending today's webinar. If you'd like to view it again, all of our webinars, including this one, will be available on demand on the FTD Mercury Network floors on our YouTube channel. We will be sending you a very brief survey, as always, to gather feedback on today's webinar. So just ask everybody to please take a couple of minutes to complete the survey, help us to improve future webinars and other education programs for our members. And our next FTD webinar is scheduled for Tuesday, November 10th, titled Profit by Performing, Creating Customer Experiences That Wow and Win Big Sales. Lynn Switnowski-Barrett, President of Creative Business Consulting Group, will help retailers to connect with creative and value-added services that provide a customer experience unparalleled in any big box store. Learn how to create customer experiences that will increase customer loyalty for a lifetime in your store. And the registration is already available at ftdi.com. Just want to thank everybody for joining us today.
Hey, by the way, I know Lynn. Back in the days when we all used to go to trade shows, Lynn and I would see Lynn a lot. Lynn and I both do a lot of speaking at trade shows, so she does a great job. So definitely encourage you guys to join that webinar. And thank you again to my friends at FTD for letting me make this presentation. And Janet, thank you for all your help in all of this. And I really look forward to talking to all of you again. And I hope you all have a great day.
Thank you so much, Dan. Stay safe, everyone.